Have you noticed what just happened in the silver market because something changed almost overnight, and very few investors are talking about the real reason behind it? While most headlines remain focused on the Federal Reserve inflation and the latest economic numbers, another major financial center may have quietly shifted the future of silver. That place is Hong Kong. The latest developments coming out of Asia are making experienced investors pay much closer attention because this could become one of the biggest turning points for silver in years. If you own silver or are thinking about buying it, you need to understand why this story matters before the rest of the market catches up. The silver market has always been different from gold. Gold is mainly viewed as a store of value, while silver carries a unique double role. It is both a precious metal and one of the most important industrial materials in the modern world. Every major technological revolution, from electric vehicles to solar panels to artificial intelligence infrastructure, requires significant amounts of silver. That means demand is no longer driven only by investors seeking protection from inflation. Industrial demand has become just as powerful. Now, another factor is entering the picture, and that factor is Asia. For years, the center of global precious metals trading has gradually expanded beyond traditional Western financial markets. London and New York still dominate many parts of global trading, but Asian financial centers have continued growing in importance. Hong Kong has positioned itself as one of the largest international gateways, connecting global capital with mainland China and other Asian economies. That matters because capital flows often shape commodity markets long before prices fully respond. Recent developments suggest that Hong Kong is strengthening its position as a major hub for precious metals investment settlement and trading. Financial institutions continue expanding their precious metals services, while investors across Asia are showing renewed interest in physical assets during a period of economic uncertainty. Why does this matter for silver? Because liquidity attracts liquidity. Whenever more investors gain easier access to silver products, physical bullion and institutional trading platforms' demand can increase far faster than many people expect. This is exactly what experienced commodity traders monitor. Markets rarely move because of one headline. Instead, they respond when multiple forces begin pushing in the same direction. Right now, several important forces appear to be lining up. Global inflation has cooled from its highest levels, but remains above long-term targets in many economies. Central banks continue watching inflation very carefully. Interest rate expectations continue changing almost every week, depending on new economic reports. Bond markets remain volatile. Government debt continues reaching record highs. Geopolitical uncertainty has not disappeared. At the same time, industrial demand for silver continues expanding. This creates a very interesting setup. Investors who normally focus only on stocks are beginning to reconsider portfolio diversification. Many institutional investors understand that precious metals often perform differently than traditional financial assets during uncertain periods. That is where silver becomes increasingly attractive. Unlike gold, silver benefits from both investment demand and manufacturing demand. If either one increases, prices may respond. If both increase together, the impact can become much larger. Hong Kong may now become an important part of that story. Think about how financial markets evolve. Every major commodity needs strong trading centers. These centers improve price discovery, they increase market participation, they attract international capital, they improve physical delivery systems, they create confidence among institutional investors. Once this infrastructure expands, market participation often follows. That does not automatically guarantee higher prices. However, it creates conditions where larger capital flows become much easier. This is exactly why many analysts are paying close attention. Another important factor involves China itself. China remains one of the largest consumers of industrial metals in the world. Its manufacturing sector directly influences global demand for silver through electronics, renewable energy, electric vehicles, medical equipment, and many advanced technologies. Whenever Chinese economic activity improves, silver demand often receives additional support. Hong Kong serves as an important financial bridge connecting international investors with opportunities across Asia. That bridge becomes especially valuable during periods when global investors seek greater exposure to Asian markets without directly entering mainland financial systems. The timing also appears interesting. Governments around the world continue investing heavily in clean energy infrastructure. Solar energy alone requires enormous amounts of silver. Every new solar installation consumes silver for electrical conductivity. Electric vehicles require silver. Modern electronics require silver. Advanced telecommunications require silver. Artificial intelligence data centers require enormous electrical infrastructure that also depends on silver-based components. Many people still think of silver mainly as coins and jewelry. That perspective no longer captures the full picture. Industrial demand now represents one of the strongest long-term drivers supporting the metal. Supply, meanwhile, faces its own challenges. Opening new silver mines takes years. Environmental regulations continue becoming stricter. Production costs continue rising. Ore grades at many existing mines continue declining. This creates a situation where demand can increase faster than supply. Whenever markets experience this imbalance, prices often become much more sensitive to unexpected news. That is exactly why every major financial development deserves attention. Hong Kong expanding its influence within precious metals markets may appear like just another business headline. However, professional investors understand something important. Markets rarely wait for everyone to notice. Institutional money often begins positioning long before retail investors fully understand the story. Another reason this development matters involves investor psychology. Confidence drives markets. When respected financial centers strengthen precious metals infrastructure, it sends signals across global investment communities. Banks respond. Fund managers respond. Trading firms respond. Private investors eventually follow. This chain reaction does not happen overnight, but once momentum builds, it often accelerates quickly. Silver has experienced these cycles before. Long periods of quiet trading have sometimes been followed by sudden, explosive price movements that surprised almost everyone. Many investors only notice after prices have already moved significantly. By then, opportunities often become much smaller. That is why experienced investors focus less on daily headlines and more on structural changes. Structural changes shape long-term trends. Short-term news creates temporary volatility. Long-term infrastructure creates lasting market shifts. Hong Kong appears determined to strengthen its role within global finance, despite increasing international competition from other financial centers. Expanding precious metals activities fits naturally into that strategy. As more global capital flows through Asian markets, demand for efficient trading platforms, settlement systems, and physical bullion storage continues increasing. Silver stands directly in the middle of this evolution. The next question becomes even more important. If Hong Kong continues expanding its precious metals ecosystem while industrial demand remains strong and central banks continue navigating uncertain economic conditions, what could happen to silver prices over the next several years? The answer may surprise many investors because the forces building beneath the surface appear much stronger than most daily financial headlines suggest. What makes this situation even more interesting is that silver does not need every economic indicator to become perfect before prices move higher. In fact, history shows that silver often performs best during periods when uncertainty remains high. Investors begin looking for assets that can benefit from multiple economic outcomes instead of relying on only one scenario. Consider what is happening with the United States economy right now. Inflation has slowed compared to previous peaks, but it has not completely disappeared. The Federal Reserve continues balancing two difficult goals. It wants inflation to move back toward its long-term target while also protecting economic growth. Every employment report, every inflation reading, and every retail sales number has the potential to shift expectations for future interest rate decisions. That matters because precious metals are extremely sensitive to interest rate expectations. When investors believe rates could eventually fall, silver often becomes more attractive. Lower interest rates can reduce the opportunity cost of holding non-yielding assets such as silver and gold. At the same time, a weaker US dollar can make precious metals less expensive for buyers using other currencies, which can further increase global demand. But there is another side to this story that many people overlook. Industrial demand does not always wait for perfect economic conditions. Governments around the world continue investing billions into renewable energy projects. Major technology companies continue building larger artificial intelligence systems. Data centers continue expanding. Electric vehicle production continues growing even if growth rates fluctuate from one quarter to another. Every one of these industries depends on silver. Silver has the highest electrical conductivity of any metal. That single characteristic makes it extremely difficult to replace in many advanced technologies. Engineers can reduce silver usage in some applications, but completely replacing it remains challenging without sacrificing performance. That is why many analysts believe long-term industrial demand will remain strong even if short-term economic growth slows. Now combine that industrial demand with growing investor interest. That combination has historically created some of the strongest rallies in silver prices. The market also faces another important reality. Global mine supply cannot suddenly increase overnight. Developing a new mine often requires many years of exploration, environmental approval, financing, construction, and production testing. Even after all those steps, mining companies still face labor costs, energy prices, transportation, challenges, and changing regulations. This means supply usually reacts much more slowly than demand. Whenever demand rises faster than production, the market can tighten quickly. Professional investors monitor this balance very carefully. They know that commodity markets often remain stable for long periods before suddenly experiencing powerful moves once supply becomes constrained. Hong Kong could play an increasingly important role during that process. As more investment products become available through major financial centers, more capital can enter precious metals markets with greater efficiency. International investors value liquidity, transparency, and reliable settlement systems. Financial hubs that provide those advantages often attract larger institutional participation. Institutional participation matters because large funds manage enormous amounts of capital. Even a relatively small portfolio allocation towards silver can represent billions of dollars entering the market. Retail investors often focus only on daily price movements. Institutional investors frequently study longer-term trends. They examine monetary policy. They analyze manufacturing demand. They evaluate geopolitical developments. They study currency movements. They monitor central bank activity. Most importantly, they search for structural changes before they become obvious to everyone else. This is why Hong Kong continues attracting attention. The discussion is no longer only about one city. It represents the broader shift toward Asia becoming an even larger force within global commodity markets. China remains one of the largest manufacturing economies in the world. India continues expanding its industrial base. Southeast Asia continues attracting new investment. As regional economies develop, demand for industrial metals naturally increases. Silver stands to benefit from that expansion. Another factor involves investor confidence during periods of geopolitical uncertainty. Global markets continue facing unpredictable developments. Trade disputes can emerge quickly. Regional conflicts can influence supply chains. Currency volatility can create unexpected risks for multinational businesses. Whenever uncertainty increases, investors frequently seek diversification. Gold traditionally receives most of the attention during those moments. Silver, however, often follows with even stronger percentage moves once investor demand accelerates. That is one reason experienced precious metals investors continue watching silver so closely. It combines defensive characteristics with industrial growth potential. Few other assets offer both. Market psychology also deserves attention. When silver begins attracting headlines, momentum often builds rapidly. More investors notice rising prices. Financial media increases coverage. Analysts publish new forecasts. Additional buyers enter the market. This cycle can reinforce itself for extended periods before eventually slowing. No one knows exactly when that process begins. However, successful investors usually prepare before headlines become obvious. Instead of reacting after large price increases, they monitor developing trends while markets remain relatively calm. Current conditions contain several important ingredients. Industrial demand remains healthy. Long-term supply growth appears limited. Global debt continues increasing. Central banks remain cautious. Currency markets remain volatile. Financial uncertainty continues supporting interest in diversification. And now, Asian financial infrastructure continues expanding. These factors alone do not guarantee that silver prices will immediately surge. Markets never move in perfectly straight lines. Temporary pullbacks remain completely normal. Unexpected economic data can create short-term volatility. Federal Reserve announcements can influence market sentiment. Changes in the US dollar can temporarily pressure precious metals. Professional investors understand this. They expect volatility. Instead of fearing it, they focus on long-term fundamentals. That approach often separates successful investors from emotional traders. Another important development involves central bank behavior. Although central banks primarily purchase gold rather than silver, their actions still influence the entire precious metals sector. Strong gold buying demonstrates continued interest in hard assets. That positive sentiment frequently spreads into silver markets, especially when investors begin searching for additional opportunities beyond gold. Silver also remains relatively small compared to many financial markets. Because the market is smaller, significant investment flows can sometimes produce larger percentage price movements than investors expect. This characteristic creates both opportunity and risk. Prices can rise quickly. They can also experience sharp corrections. That is why understanding the underlying fundamentals becomes so important. Right now, those fundamentals continue evolving. Hong Kong strengthening its position within precious metals markets represents another piece of a much larger global transformation. Financial power continues becoming more diversified. Capital continues flowing across multiple regions. Commodity demand continues shifting alongside technological innovation. Silver sits directly at the intersection of all these powerful trends. The biggest question now is not whether silver remains important. The real question is whether the market has fully recognized how many different forces are beginning to support its long-term outlook. For investors watching carefully, the answer may become much clearer sooner than most people expect. Even with all these positive factors, every responsible investor should remember one important truth. No market moves in a perfectly straight line. Silver has always been one of the most volatile major commodities in the world. That volatility can create incredible opportunities, but it can also test the patience of investors who focus only on daily price swings. This is why understanding the bigger picture matters far more than reacting to every headline. The biggest mistake many investors make is assuming that one news event alone will determine the future of silver. Markets simply do not work that way. Prices are influenced by hundreds of factors happening at the same time. Economic growth, inflation, interest rates, currency markets, industrial demand, mining production, investor sentiment, geopolitical uncertainty, government policy, global trade. Each factor pushes the market in different directions. The strongest long-term trends usually develop when several of these forces begin moving together. That appears to be exactly what many analysts are watching today. Industrial demand continues expanding. Supply growth remains relatively limited. Financial uncertainty has not disappeared. Asian markets continue becoming more influential. Investment demand remains healthy. Central banks continue showing confidence in precious metals through record levels of gold purchases. All of these developments create an environment where silver deserves much closer attention than it received just a few years ago. Hong Kong's growing role adds another important layer to this story. As financial infrastructure expands, investors gain easier access to precious metals markets. Trading becomes more efficient, liquidity improves, institutional participation becomes easier. These improvements may not create immediate price explosions, but they strengthen the overall foundation of the market. Strong foundations often support long-lasting trends. Another reason many professionals remain optimistic involves the relationship between silver and gold. Historically, silver has often lagged behind gold during the early stages of precious metals rallies. Then, something interesting happens. Once investor confidence increases, silver frequently begins outperforming gold on a percentage basis. That pattern has repeated itself several times over the past decades. No one can guarantee history will repeat exactly, but experienced investors continue watching the gold-to-silver ratio very carefully because it often provides valuable clues about future market behavior. If gold remains strong while industrial demand for silver continues increasing, the conditions could become very favorable for silver over the longer term. Technology is another reason this market continues attracting attention. The world is becoming more connected every year. Artificial intelligence continues expanding. Cloud computing requires larger data centers. Renewable energy projects continue growing. Electric transportation continues developing. Modern medical equipment continues becoming more advanced. Every one of these industries depends on reliable electrical conductivity. Silver remains one of the most valuable materials available for that purpose. Replacing it completely remains difficult in many applications. This creates natural demand that extends well beyond traditional investment buying. Many investors ask whether silver could eventually face shortages. The answer is more complicated than a simple yes or no. Physical silver continues being produced around the world. However, if demand grows much faster than new supply enters the market, prices may need to adjust in order to balance buyers and sellers. That is how commodity markets naturally function. Higher prices encourage additional production. Lower prices reduce investment. The market constantly searches for balance. What makes the current environment unusual is that several powerful demand drivers are growing at the same time. Investment demand, industrial demand, renewable energy demand, technology demand. These forces could continue supporting silver for many years if current trends remain in place. Investors should also remember that patience often becomes one of the greatest advantages in precious metals investing. Many of the strongest rallies in history developed after long periods of quiet consolidation. Those who remained focused on long-term fundamentals often benefited far more than those attempting to predict every short-term move. Risk management remains essential. No investment should ever be based entirely on emotion or excitement. Diversification remains one of the most important principles in investing. Understanding personal financial goals matters more than chasing headlines. Silver may offer significant opportunities, but every investor should carefully evaluate their own strategy before making financial decisions. The coming months will likely bring several important events that could influence precious metals. New inflation reports, Federal Reserve meetings, employment data, manufacturing activity, U.S. dollar performance, global economic growth, developments across China, investment activity in Asia, and of course continued progress from financial centers like Hong Kong. Every new piece of information will help investors better understand where the market may be heading next. What seems clear today is that silver is no longer simply following old patterns. The market is evolving, demand is changing, global financial influence is shifting. Technology is creating entirely new sources of consumption. Investment interest continues growing. These changes are happening gradually, but together they could reshape the future of silver in ways many investors still underestimate. Whether prices move higher next week, next month, or next year, nobody can predict with certainty. What investors can do is stay informed, understand the forces driving the market, separate short-term noise from long-term trends. Watch how institutional money responds. Monitor industrial demand. Follow central bank policy. Keep an eye on the U.S. dollar. And pay close attention to developments coming from Asia because they may become increasingly important in the years ahead. Silver has surprised investors many times throughout history. It has experienced dramatic rallies after long periods of silence. It has rewarded patience while frustrating those searching for instant results. The next chapter may already be beginning. The question is not whether the silver market is changing. The real question is whether investors are paying attention before everyone else notices. If you found this analysis valuable, make sure you hit the like button and subscribe to Silver and Gold Watch for more updates on gold-silver inflation, the Federal Reserve, and the biggest stories shaping the global precious metals market. Let us know your opinion in the comments. Do you believe Hong Kong's expanding role could become a major catalyst for silver prices over the coming years? Or do you think another factor will have an even bigger impact? Thank you for watching, and we will see you in the next video.